I'm Charlotte McLeod with the Investing News Network, and here today with me is James Anderson of sdbullion.com. Thank you so much for being here during a very exciting time for silver.
Thanks for having me. It's a pleasure to be on the show.
Of course, and we're going to jump right into our questions. Obviously, we're here to talk about silver and specifically how it's been affected by the ongoing GameStop, Wall Street bets, all of that kind of Reddit situation. I wanted to start off by asking if you can give me a sense of the demand you've been seeing at SD Bullion since silver started attracting attention a week or so ago. So, yes, I
Yeah.
think we'll
Oh,
start there.
so over the weekend, our CEO was actually interviewed on a mainstream media outlet, and he talked about how the demand was unprecedented, and the demand last year during the COVID era was absolutely off. It was record breaking for most bullion companies in the industry that do the job right, and everybody this past weekend, publicly, that were stating that it was even louder than that. I mean, in terms of volume, it was anywhere from 10 to 25 times typically the volume on a weekend, depending on who you were talking to. So, yeah, just unbelievable surge of buying, and it's strange the narrative that was around it, and what the truth of it is, the underlying truth of it all. That's one of the more mysterious parts about the whole thing, is just kind of how it came about. I kind of have theories, but I'm not going to probably just go off and venture into speculations. But it's real. It's absolutely real. You obviously can go around and see how these websites don't have any inventory left. And I just did napkin calculations this morning, just as far in last night, like just this far in 2021 of the places that report silver store value demand between the silver ETFs, the government bullion mints, and then the private bullion retailers who are out talking this weekend and actually giving out ounce figures, the amount of ounces they were selling. I mean, it is a safe bet that this January to just into February, 33 days that we've had, and I'm being conservative because I don't like hyperbole, there was 150 to 200 billion ounces of, or, basically bets that were being placed on silver store value. And I mean, that is unbelievable in that's such a short time. I think last year we had just over 200 million ounces, according to the Silver Institute, for physical bullion coin bar demand, et cetera. That's in a year, and during COVID, which was really, really heavy. But this is a whole new level.
Right. And I like, just to be clear, this is not just you, this is many places are
Oh
out of
yeah.
silver. They don't have it. Yeah.
Now that's not just in
And
the United States either. That's in Europe. That's in Asia. That's all around the world. This is a worldwide phenomenon.
so this is global. And do you have a sense of what products people are buying in terms of physical silver, and who are these people who are buying?
So a lot of them are regular buyers who are coming in and buying because they're concerned. They see the chance the spot price might get away from them. So they're, I think, trying to scramble for as cheap a price silver as they can, because I think a lot of them believe $50 an ounce silver is possible this year, and so they're maybe trying to get a little bit ahead of it. I think you also have a lot of new entrants coming into the market. We noticed that on our, I noticed that on the channel that I operate for the YouTube channel for SD Bullion. I mean, there's a lot of comments of new people, and that's great. A lot of new younger people coming in, and it's one of those things. Once you learn about bullion, you kind of never forget it. It's one of those things it's an alternative universe essentially when it comes to the financial world, and so it's good to see young people coming in and learning about perhaps maybe stuff that they never heard before, and learning the other side of of our history of sound money, et cetera, in this country. So, yeah, it's all over. To answer the question simply, it's all over the gambit. Majority, I think, are experienced people, but there's a huge amount that are new.
All right. And maybe some more context on this buying. What does it really mean when we see dealers having shortages like this? Does it actually mean there's a silver supply crunch that we should potentially be worried about? Or is it more that there's specific products that you can't get, or they might just take longer?
Right. So it's a spike and dive industry. So there'll be a month or two where it's just literally really quiet and placid. The news will be kind of quiet and placid, and then something will break, and then just all of a sudden it'll tenfold and really quickly, and the phone won't stop ringing for weeks. So it goes through spells, where, for instance, COVID, it was very, very heavy in last late winter, early spring. And then as time went on, kind of anticipated toward the end of this year, but it's repatched again, it's restarted, and now it's spiking much larger than it was before. So there are that situation is difficult, because imagine if you're running a business and you have to employ people. Like how how are you going to be staffed? You have to have flexible staff. I mean, it's like you have to have people who you can call, who are trained, who are ready to go, but they don't have another job, hopefully, when you call them, right? I mean, like, it's very difficult. And then think about, like, in terms of minting and refining and creating bullion products that people need, right? How capital intensive that is, right? There's only so many people, only so many organizations that are able to stomach the bear markets into the bull markets, and that are shrewd enough, that know how to survive decades and do this right. So when you start talking about refineries and bullion mints, et cetera, the infrastructure that's set up to handle tremendous, worldwide global demand for retail bullion product, it's just not there, especially in silver. In gold, at some days, for instance, in 2008 global financial crisis, we had some shortages in retail products in gold. There was big premiums there too, and I expect in the future that'll come about again. The other thing that when you say the word shortage, people always scoff and think, I'm like pumping retail products and trying to say like there's this massive shortage so we can make profits, et cetera. It's not totally the case. We do make good profit when there is this situation. There's no doubt our margins they're widened. We make more profit margin, that's for sure. But we build a war chest so we can get through these times when no one's calling, right? That's what this is. So when it comes to a real shortage, which I think is what we're going towards, if the phenomenon keeps growing throughout the decade, is you're talking about 1,000-ounce silver bars, or 100-ounce gold bars, or 400-ounce gold bars for, high net worth investors who don't want it to maybe be involved with the COMEX or other of these various exchanges. And they start calling in and saying, I want physical delivery at this Brinks location at my segregated account directly, pull it. Okay. Everybody starts doing that. My Loomis over in Switzerland, my G4S over in London. I want it my Malcolm Amat over in Hong Kong. If you start having high net worth people doing this and they start getting freaked out enough, you're going to have a situation that'll be shortages in gold and in silver in terms of immediate delivery at a reasonable price. Anything that's close to spot. Spot might say it's, this or that, but if you actually want delivery of a decent size, you're going to pay through the eye.
Right. And you mentioned premiums. I recall that last year premiums for precious metals were quite high during the crunch that we had. What are they looking like right now?
Pretty high. I monitor these because there's a little bit of an arbitrage trick as a dealer that you can do, because premiums on certain products can get much higher than premiums on more generic, lower demanded products. So sometimes you can arbitrage and flip one to the other and make yourself more ounces, and also give customers a great deal when you do that. So there's all types of arbitrage opportunities when it gets like this, but it usually, and why I like to own them when the premiums are low and reasonable, I like to buy Silver Eagles because they're just so sought after, and it's like the easiest go-to for the new entrant into the market. The new entrant into the market, they're like, what should I get? People 60% of people are just like, get the Silver Eagles, and so they buy the Silver Eagles, and that's fine. Silver Eagles though right now they're pretty pricey. I mean, they're like 40 odd fiat Fed notes per troy ounce. So it's not cheap. Spot's what, 27 or whatever. So that's a pretty big gap. You're making a bet that spot's going to make a run at 50, and then you'll at least, be equal to what you put into the coin. So, when it's situations like this, when the shortage gets very, very drastic and there's like really gapped out premiums, I suggest to look at generic, kind of get as close as you can to that spot price. If you really want to get a position and you have a derivative perhaps that you're even interested in, and that, like a PSLV, one that's trustworthy, you could, as long as the premium on that hasn't blown out, because sometimes that blows out too, and you get, you pay way too much to what you're getting. So there's various things you got to be careful of. But if you're going to park it in derivative, you better make sure that derivative is something you can trust until the bullion market maybe comes around, and then you can get the physical. So it's one of those things. It's kind of like, if you're just getting into the industry, if you're just starting out, go slow, go small, take a little, don't go all in on one purchase. This is like anything, you kind of dollar cost average into a prudent position. And so, chunk by chunk, I say.
Okay, so I think that gives us a pretty good look at what's going on with physical silver right now. I do want to get into other aspects of the market because, you've mentioned that a lot of new people may be looking at the space. And my sense when I was reading those first Wall Street Bets silver post was that there was a lot of confusion among people. They wanted to do like a silver squeeze, but nobody really seemed to know how to do that and what to buy to do that. So, could you talk a little bit about the difference between physical silver and then we've got SLV? You mentioned PSLV. Can
Mhm.
you explain that to us?
Sure, sure. And so bullion, when I say bullion, I'm just specifically referring to silver bullion coins, which by definition are struck by sovereign mints, national mints, that usually have a legal tender face value on them. Things like silver eagles, silver maple leaves, silver Austrian Philharmonics, etc. There's also silver bullion bars, which are typically done by private mints, but there's a couple government mints that do them. Royal Canadian Mint does some bars. And then you have silver rounds, which by industry definition means it's struck by a private mint. They look like a coin. I mean, it's just like a coin, it looks like, but it's struck by private mints. And those are out there. Those bars and rounds are typically going to get the lowest premium when you're buying, or when you're selling. So you'll get in hopefully at a lower price, but when you go to sell, you'll get scoffed at in a lower bid. Typically, that's generally what happens. But the bid ask spread on these products is usually thinner than it is on, especially when you're in a shortage with silver eagles, for instance. The one thing about bullion that is really nice is that it gives you optionality, though, right? You're the market maker. You're the one in charge. So you don't have to sell the stuff if you never want to. It's very private. You can just hand that off to your loved ones or whatever. No one will ever know. Good luck. I mean, good luck trying to track that, right? People make a joke all the time, like I had a boating accident, etc. I mean, that's one of those things. And we're moving into a situation now where the threat of a fiat CBDC system is coming, and so people want to have something that they can hold and hide and keep for their family, et cetera, and not have everything tracked and traced. Like everybody has to go full digital, it seems, and less cash, et cetera. So people want to have a core asset that they can hold on to and feel is balancing their financial portfolio. So and then if you move to the next, it was PSLV is a closed-end fund. PSLV is managed by Eric Sprott and the team over at Sprott Asset. Very, very trustworthy guys. Guys that we in the industry have been known, we talked to for a decade plus. And Eric Sprott is one of the sharpest guys in the industry, and he's very aggressive too. He's at the moment. I think 2010s was kind of rough for Eric. He originally said at the beginning of 2010s that 2010s was 2000s was the decade for gold, and 2010s was going to be the decade for silver. Not so much, really. I mean, it didn't work that great. I think we underestimated how long that little intra bear market we're on from 2011 to roughly 2016. That was one of the most brutal of all time. But obviously things have turned, and Eric Sprott is set up to become a multi-billionaire. I've already looked at some of his holdings on Bloomberg terminals. It's unbelievable how much he could be making in this decade. So Eric Sprott's PSLV is very trustworthy, and they're aggressive. They may end up issuing shares and then turning to the bullion banks and saying, deliver X amount of $1 billion worth of bullion to our closed-end fund, and forcing them, basically calling them on it. Go out there, and if you don't have it, you go out there and bid it up. Go out there to find it. I don't care, but bid it up. And so that's one of those things where they may end up using their PSLV kind of as a tool to put leverage on the system. SLV is the most popular, most known ETF. It's owned by BlackRock and iShares. So SLV is it's okay in my the only way I can actually rationalize someone having an allocation to SLV would be for a short to medium term day trade option idea. I would not suggest you holding that as your safe haven silver bullion investment. That is not a smart thing, because if you go down the custodian rabbit hole, who's in there, who's the custodian? JP Morgan, which just got fresh off 10-year allegation of being racketeering precious metals desk. They're the custodian. And so they just paid $1 billion fine, roughly, to Department of Justice and whoever else was involved with that lawsuit. There's a whole bunch of different what you call authorized participants who are involved, and what it looks and feels like is mostly like a slush fund. These various authorized participants can come in and out. They can withdraw, and they can convert shares and withdraw bullion when they need it, when they're in a pinch, et cetera, et cetera. And so there's a big feeling out there that they don't have what they claim to have. There's a lot of double counting likely going on, and so it's a question of, well, when's that jig going to come up? It'll probably come up when you start seeing spot go like this. That's when you know the jig's up on SLV. And so I think a lot of SLV, the trouble is a lot of SLV the higher net worth hedge funds, et cetera. I don't think they completely understand the risks they're running, and sometimes they're forced by the parameters of their decisions in terms of they can't be in anything else other than large ETFs. Maybe they can't even be in PSLV, depending. So that's one of the difficulties, is that you have the rules that are set up to keep them in the gated community, so they can't go out and actually bid real bullion on the open market. So.
Okay, now I watched your video from I think over the weekend on the silver squeeze. Can it actually happen? It's a great video. People should go out and take a look at that if they haven't seen it already. I'm going to ask now again. So, how is it that this could play out? Because I know that I think the sense is that there's been some momentum taken away from silver. It's down from $30 where it was earlier in the week. We don't have to go too deeply into Wall Street bets, but they are backing off from silver, saying they are not interested. It's a distraction from GameStop. So how does this play out in your mind with these new circumstances?
So one thing I didn't mention about the SLV, yesterday we had a record inflow into the SLV, and we're not going to know exactly who or what that was, but there was a 1.5 billion notional bet put into SLV last night, which is tremendously large. It's when you look at the charts, if you go to my Twitter feed at James Henry Ann and scroll, you'll find these charts. It dwarfs what Warren Buffett was doing in the 90s. It dwarfs what the Hunt brothers were doing. It's just massive. So we don't know who that bet was, and it happened yesterday in the SLV fund. I got to regress in terms of what you're asking, refresh my mind again, because I wanted to get that point off so people understand that was big news, and I'm still shooken by it. I mean, how big of a news that was. Oh, the Wall Street bet crowd. Okay, so I understand completely. Like, these guys were over there, they were grinding GameStop and they were grinding AMC and been doing it for like a year plus as a crew, and they had their and then all of a sudden they start getting real success, and they feel like these headlines coming out of the mainstream media about they turned to silver, and me being in the silver industry, I know how the mainstream media lies. They just make up stuff, and then they all work in cahoots, and I now here we are, the benefactor of that, right? And it's like, well, what's really going on because that's not what's happening under the hood. What's really happening? Well, what's really happening is we just had a 1.5 billion notional inflow into SLV, and it didn't move the spot price, right? So like that is that's a pretty good hand of tricks, whoever pulled that off, right? The fact that spot went from 30 down to 26 when that happened, it's like, wow, that's a pretty impressive feat you just pulled off, whoever that was, right? So I think what we're having is a situation where it's a lot of complexity, it's a lot of nuance, a lot of speculation. But as time goes on, I think a lot more truth and understanding is going to coming out. But it is real. There are people who are buying it on the retail level. But what I suggest is that it's moving up the chain. I think it's moving up the complex of the entire precious metals industry, not just simply people who are going long in miners or in ETFs. But I think eventually you're going to see derivatives on COMEX. You're going to see longs coming in and slamming those folks that are on the short side, and a lot of times the folks on the short side are the commercial banks who are allegedly naked short enough metal. And so that, I believe, is where this ultimately leads, and that is a situation that we're going to see fireworks and a lot of volatility. The COMEX, for instance, in 2015 set up these things called price circuit breakers. The price circuit breakers level 1 for silver is $3 an ounce intraday. It moves to $6, then $9, then $12 an ounce intraday. So imagine spot silver moving $12 an ounce intraday, and so that was set up in 2015. Their CEO Terry Duffy, I think in 2017, was on Fox Business News talking about at some point the worm will turn, and you're going to see these precious metals just flat out go exponential, and it's going to be like everyone's going to act shocked and whatever. And he's basically just sitting there running his mouth talking as if they haven't had a policy from 2013 now just extended through 2022 about central bank incentive program, where they literally allow foreign central banks to come in and be active participants in the derivatives market as long and get a discount for the high volume trading, so they can use these banks as proxy desks in order to move around any market they want, right? So if central banks literally want to collude and move any market, they certainly can. And the COMEX, the NYMEX, the CBOT, the CME Group, literally, those documents are on my Twitter handle. You can totally see them. And that's been the case since 2013.
Okay, so as we're wrapping up a little bit, one thing I want to ask is what's your advice to people who are looking at the silver market, either for the first time, or they've been here for a while and they want to be tracking this. They want to understand the situation where it's going, because my impression is that it's quite opaque. There's this fairly mysterious large short position, fairly mysterious other goings on. What's your advice for how to tackle that?
Yeah, it's a saga. I was telling my sister the other day, I could write a book about this. I mean, I just put 12 years of my life into it, and thinking about it just brings me pain. It's 12 years of a lot of pain, but a lot of joy too when things are going well. But it is a long saga. And my suggestion to people who are just coming into this is start, by learning the fundamentals. If you're interested in investing in precious metals, understand what the fundamentals are that drive these markets. And then, go into price discovery. How is the price discovered? Who are the players involved with price discovery? How is spot price derived? How are the futures prices derived? How are the bullion products? Where do they come from? How are those prices derived, et cetera? So it's a long, deep rabbit hole, but it's well worth it. I mean, my suggestion is people, they need to look up. I did a thing on, 10% allocation to gold bullion is outdated. And, basically, if you live under a full fiat currency regime, there are back tests that start from 1968 all the way through now, 2020, 2021. The one I have is from 1968 to 2016, and it back tests bullion in various, bullion mixes between gold, silver, platinum, palladium, and 450 different portfolio mixes between bullion and mixes of S&P 500 index and the U.S. Treasury market, and U.S. bonds and notes, et cetera. And what it came up with was, over that 48-year data set, it said that gold bullion over that 48-year time frame at a 25% allocation of those three different asset classes was the best in terms of smooth risk reward. Okay. And so, gold bullion right now, it seems pricey, but I mean, we live in a world where Bitcoin's at 35 grand or whatever. And it's like, central banks don't own Bitcoin. Central banks own gold for a real reason. It's because when the currency goes wrong, they better have it, or else they're going to be out of a job. Right. And so they need to have it to restart a system. Right. So gold is always, a fifth of gold, of all the gold we've ever mined, sits with governments and their central banks. That's for a real reason. And so, it's one of those things, gold you keep, for a foundation of your wealth, and governments do it. And so should, high net worth down to middle class people. I mean, in the East, that's the way it is. People buy high grade jewelry, and that's the way they save, And so it's just, as we're moving toward the East, the East is going to become more and more wealthy. Indian and Chinese, the Indians especially, they buy a lot of silver. So I think you need to, if you're just getting into this, if you have interest, you need to come to our website. There's a book. You can go to sdbullion.com/book and get the free PDF. I wrote that at the end of 2017. So maybe it's a slightly bit dated in the charts, et cetera, but I still stand by a lot of the ideas I have in it, and the projections out toward the future of suggestions of things that could come. So also within it is just evergreen, advice for people that are thinking of getting into the bullion industry, how you avoid scams, how you avoid counterfeits, how you avoid people that, how you do due diligence on their companies to make sure that you're going to be dealing with the right counterparties. That's so key when you're dealing in this industry, because it's just like any industry. There's quality folks, and then there's people who are, I wouldn't trust as far as I could throw.
Okay, well, I think that sounds like a good place to leave it for today. Thank you so much for coming on to give an overview of the situation. It's very complicated, and definitely appreciate the time there.
Yeah, thank you for having me. It was a pleasure.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is James Anderson with sdbullion.com.